Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic Budget 2021 and Investment Viewpoint. As an investor, we always look at budgets to see how markets will respond, how global investors will see us, and how the budget will translate going forward. We also look at how the budget responds to what it already said 1 year ago. If you look at that, this budget responds very differently from what it said 1 year ago. Firstly, the deficits are going to be very high. 9.5% fiscal deficit is something we can never imagine, but that has been accepted simply because of COVID. Secondly, while running this deficit, the government has managed to continue to invest, and that's a silver lining. It also says that it will continue to run deficits till 25-26 with the commitment that it will continue to invest. Now that is clearly a very strong directional pointer from this budget. Next year's fiscal deficit will be 6.8% and it will eventually reach 4.5% only in 25-26. This effectively makes it very difficult to invest in the debt market. So effectively, equity tends to get a slight leg up, but it's not a secular leg up. It never was a secular leg up, right? If you look at last year, looking at COVID, we gave a leg up only to the defensives. We thought that the whole market was just meant to be defensive. In my view, this budget turns that premise a little bit and it actually tends to tilt it. We don't know whether it could become upside down. That depends upon how everybody perceives the budget. If you look at tax reliefs, there are no major tax reliefs except the need to file for senior citizens above 75 years. There's hardly anything for anyone. But there are no fresh taxes, which means the government is clearly telling us that it would rely upon its tax machinery to tighten, to bring better compliance, to check evasion and to grow revenues. So that is going to be the tone, which means effectively this budget sets the tone for further formalization of the economy, and you can build that into your investment opinions and judgments. It's certain that the economy will formalize far more next year because that is going to be inevitable given that the government will tighten its hold on GST evasion. Farming is a sector where everybody thinks something new will come, but this year has been a status quo. The government has stopped being adventurous. It's taking nothing for granted. It doesn't want more damage on its hands, and therefore it just says that we will procure more under MSP. We will continue to do everything we did for the farmers. Effectively, it's trying to cool tempers. So there is no big reform in farming in the budget. But that does not rule out reform, given that there's already a body of reform from the last budget waiting to be implemented. So we should go back and check on that to see which part of that budget can be taken forward in this year. So that is the only thing you can look forward in farming. Next is the most critical thing as far as our future growth is concerned, which is exports. Clearly, government has emphasized that PLI is here to stay. They've committed 1.97 lakh crore over 5 years. So every year a lot of money is going to be given to exporters based on what they produce, which means that this is going to be like variable pay. It's going to be like an incentive given to exporting companies to produce more and export more. And they've chosen the sectors, you all know that. So those who are very committed, who are capable of delivering, will benefit from this PLI. And exports will naturally start becoming a much more significant economic driver in the next 5 years than they were in the last 5. So from export point of view, it's a reinforcement and it is a statement for the future. The next one is infra. Here again is a sector where balance sheets were terrible, private sector was withdrawing, and the government has stepped in as an investor, as somebody who will continue to maintain the momentum in infrastructure creation. It's also doing one more thing. It's following a twin approach of investment and monetization. So on the one side, government is going to take assets which it has completed, set up and creating revenue and it's going to monetize those assets, which will release a lot of money to the government, which in turn will be put into newer assets. So that is going to be how the government is going to speed up its own spending wheel in infra. So that giant wheel is going to go a little faster. So that is going to be something which will help a whole lot of companies related to infra, and it will also help the commodities. That remains to be seen. But clearly, it's also a signal for the private sector, because if there's so much government commitment, then there's a lot of opportunities also being opened up for the private sector. So that is something which a lot of people will be interested, and it may draw more global players than domestic players. And that's clearly connected to disinvestment, because some of the infra companies are going to be disinvested, and we should see how this plays out next year. It will be a very definitive year for infra, both on the investment side and on the monetization side, and the government is standing there quite confident of delivering what it wants. Healthcare is the next one. For the first time, we have pitchforked healthcare to center stage. It is the first pillar among the 6 pillars of this budget, which means that the government is going to reform healthcare like never before. It's just the beginning of that reform. So you can assume that healthcare is today where the capital markets were in 1994 before SEBI started. So all these reforms and regulations will happen incrementally over the next 4 to 5 years in healthcare. This will disrupt a lot of listed healthcare entities. It will disrupt the economics of healthcare. It will bring government as a very key player in healthcare delivery to a majority of the people. It will be only a small section of people who will seek private healthcare. A good part of healthcare is going to be state delivered. So that is something which you can like or dislike, but that's the direction healthcare is taking. Then auto. As far as auto is concerned, except for the voluntary scrappage policy, there's not much for auto. And auto is going to be the sector that is going to be disrupted the most in the next 5 years. So the government has not really done much for auto directly. So that is something which would be a bit of a disappointment. As far as power distribution is concerned, there again, power distribution is where telecom was years ago before private players entered. Government says it will give an option to the consumer to choose among distributors, which means that it's going to be quite tough for players. A field will open up and grow. So it's going to be very exciting times in power distribution. But early days will, as always, be very tough to judge and very difficult to play also. So as an investor, it's going to be hugely challenging, and it's going to be a leap of faith. Even as a businessman wants to enter that sector or grow in that sector, it is not going to be easy, but that's the direction power distribution is going to take. Insurance is the next big area. Clearly, the government is setting it up for big growth. The government wants to disinvest. At the same time, it wants more foreign participation in insurance. So 74% is going to be the ceiling for FDI. That makes it very, very interesting. A lot of consolidation is going to happen in insurance. An underinsured country is going to become adequately insured over the next 5-7 years. So it's going to be a massive growth opportunities. A lot of jobs are waiting to be created there. Insurance clearly is a big idea, and that's where we are all going to be able to participate as well, because the LIC IPO is just around the corner. So the field is being opened up, and it's early days to a long runway of growth in insurance. Privatization is something which we always looked up to, looked forward to, but always lagged. We never got there, except for a brief period in 2003-04. Privatization broadly has been a failure in India. Disinvestment has been more tokenist. So here we are at the cusp of another 2003-04 phase. We need real privatization. We need government to demonstrate its will to leave business to the businessman and focus on public infrastructure. So we are going to see a lot of privatization in the next 1 or 2 years. The government has to prove it, because after that we'll get too close to the next election. It's very unlikely that much privatization will happen close to an election. So this year and the next year should see a lot of privatization. Privatization is also going to open to all of us an opportunity to invest in businesses which in better management hands can grow faster, improve their metrics, and deliver better returns to shareholders. So that's a very, very unique opportunity. Those of you who were there in 2003-04 will remember all those lovely stories of Bharat Electronics, of Hindustan Zinc, and so many companies which turned out to be multi-baggers in the hands of investors who bet on the change in ownership from public ownership to private ownership. So, or government ownership to private ownership. So, that's another very interesting opportunity waiting to happen. I expect that to play out this year. As far as the markets are concerned, we have a new securities market code waiting for us. I'm sure it will be comprehensive and give a lot of direction to growth of the organized market, consolidation of players, creating bigger entities, better delivery of service to the investor, single point addressal of investor grievance, and a lot of integration across different parts of the securities market. So that is something that's a welcome move. And there's one more thing for markets which this budget has. There is a big push towards investing in assets. So there's a big push towards InvITs and REITs. There are a lot of concessions. TDS has been removed, which means a lot of retail can participate. Those who are outside the tax net would want to come in. So there is clearly an idea in the mind of the government to bring in public savings into asset ownership, which means that the government will sell its asset to REITs and allow the public to participate in them. And it would harness public savings to create further investment which is in the public space. So you will have a lot of government related investment and public investment which can be funded by REITs and InvITs if this move is successful. So this opening of REITs and InvITs is again a very big move as far as this budget is concerned. Overall, I think this budget has taken stock of a very difficult situation, decided it will both spend and invest, taken a balanced approach between investment and welfare, and seen an opportunity to use this crisis very quickly to rapidly accelerate economic growth back to that 6-7% at least, if not beyond. This is our best chance, I would think, and this best chance has been taken up by the government. I hope delivery happens. As an investor, I would be cautiously optimistic and continue to place faith on the economy, bet where the winds are going, go towards the places where assets are going to be created, where there's a lot of action, and take a little bit more risks. That would be my investment approach and my reading of this budget. Thank you for watching this video. Do subscribe to our channel. This is basically a platform that would serve the community, giving you investment perspectives which are independent and oriented towards investing. Stay the course with iThoughtWealth. Thank you very much.